Hello and welcome to HFMA Talk. My name is Lisa Robertson and I'm a Policy and Research Manager here at the HFMA. In this episode I'm talking to Mark Surridge, who's a Director within the Audit and Assurance at Mazars, and his colleague Cathie Eddowes. We'll be talking about the issues that we think will be important over the next few weeks and months as NHS bodies prepare for their upcoming external audits and during the audit period itself. We'll aim to cover what the key issues are expected to be this year and where auditors are expecting to focus their time, the impact of COVID-19, including lessons learned from last year's audits, when COVID still remained relatively new to us all, and what NHS teams can do to best prepare for this year's audit. So thank you, Mark and Cathie, for joining me today. I'll get you to start by briefly introducing yourselves before we listen into your conversation on this year end. Mark.
Thank you. So I'm Mark Surridge. I'm an engagement lead. I work out of the Midlands. I lead the practice that we run there, covering both NHS and local government. But I work with some fantastic NHS providers that have been at the forefront of this COVID epidemic. And that's been really quite insightful for me. And also self-reflective for the team about the work that we do, understanding how that compares to the people that are actually on the front line. So it's been really, really quite interesting this year.
Thanks, and Cathie.
Yeah, I'm Cathie Eddowes. I'm a senior manager in the Central Audit Quality team and the Accounting Technical Services team at Mazars. So I lead for NHS financial reporting and audit approach, which involves quite a lot of the techie conversations with the other firms, with the National Audit Office and NHSE and I. So it's quite a focused view I tend to have, whereas Mark's got the on-the-ground delivery of audit experience.
Thanks both and welcome. So let's kick off, I think, by reflecting back over this past year. It certainly has been a year like no other for those working in NHS finance and us all. What's it been like for auditors?
It's been quite, there's no understatement to say it's been a bit of a roller coaster of things. If you go back 12 months to the beginning of lockdown, interestingly enough, one of my team was actually near Wuhan at the time that it all kicked off. So we had a little bit of an insight about what was going to be coming our way. And as we went through pretty much the first NHS busy season, we were able to learn a little bit about the experience we'd had earlier on in our corporates. But I don't think anybody was quite as well prepared for pretty much the complete changeover in remote working, not just in a technical way, but actually in the way it's changed our lives. It's been fascinating. We've all been subject to those interesting backgrounds. As teams came in, people putting their funny backgrounds in, people walking in the background, changes in dress code, as well as adjusting to, frankly, a bit of a new work-life balance. So I found it really, really interesting. And again, working with clients, when we're having conversations with our NHS clients, it's quite a good leveler in terms of, we always feel pretty busy, but actually it's quite helpful to have an understanding of how all of the finance teams and how frontline services have really, really been impacted. So I use that as quite a helpful benchmark for our teams to say, we are busy. We are struggling with this remote working. We are struggling to adapt to life, dealing with our own personal lives, our own mental health. But look what else everybody is having to deal with at the same time. And that's been really quite helpful for us, I will say, for the team. So it's been a challenge, let's say. But I definitely think we've learned through that. And as we're moving into this busy season coming up, as teams are far more better prepared for it, the culture shock, not just the routine working, but actually the transition. This has become normal now, and we found ways that we realise that we can cope. It's been an accelerator for change, I think.
Yeah, I think you're right, because I think when you think back to the audits last year, COVID had only just hit, hadn't it? So it'd be interesting to get your take on what the main impacts were last year that we might see again, and that we may have been able to pick up some lessons from, and also what new issues you expect to see this year as the pandemic has grown.
I think the major one we all saw last year was the with us all working from home, we couldn't attend sites, which obviously has the impact on not being able to meet with teams, but also it's the physical verification aspect of our audits. So that's mainly manifested itself around inventory and attendance at stock takes, which had a big impact last year. Obviously, some limitation of scopes were issued because as auditors, we just weren't able to attend stock takes. Some trusts weren't able to perform them themselves. And similarly with testing of PPE, that's another change. PPE was always property, plant and equipment before COVID hit. Now, obviously, it's personal protective equipment as well. So for property, plant and equipment, we do verify that things exist as part of audit tests, and that's more difficult as well. So we're looking at different ways of getting around those and still being able to obtain the assurance that we need as auditors. And that's ranged from relying on controls in some cases, and what management has been able to do. Other times we've done some virtual attendances, so staff on site have been able to show us via a live stream that a certain scanner exists and it's in good working order. But the inventory side's been a little bit more tricky, and I think we'll see that again this year, because obviously we're now past 31st of March and we were still in a lockdown in effect of nothing but essential travel. So I think we'll see again a wide range of the impact on the audit, including limitation of scopes, which will come through.
You're right, Cathie. The stock and the physical attendance has been not just an auditor challenge, but to some extent we had, our teams had to have a bit of an ethical consideration there about, is it right for us to go on site? If it was, how much of this is essential travel, and what's the environment going to be like when you get in? So we genuinely had to think quite long and hard about, the welfare of our own staff versus the need to get the assurance that we need, and what the implications are. I think it's helpful to some extent that obviously these are national and consistent issues. This isn't about one audit firm. This is about audit firms, all organisations, and realising that actually what's the implication of a limitation of scope within the context of a pandemic? You rolled back 2 years ago, I think people would be having a fit about it. But actually, there's a level of pragmatism that has come through that people have reflected on, and helping us really think about what's really important as part of the audit. It is of course right to look at stock, but if we can't do it, what does that mean? And that's a conversation that we have with, not just the finance team, but with the audit committee and board. What are the implications as a result of this? And those conversations are, by and large, they've all been really sensible conversations, pragmatic and understandable. So that's really, really helpful from an auditor's perspective.
Yeah, I mean, I think you touched on the sort of practical and the pragmatic. And I think last year when we think back, there was the remote auditing. And some people were saying it felt like a little bit of audit by email or audit by Teams. How can we make that work better? Because, I remember back from the days when I was auditing, it was always that you'd just sort of run down the corridor and ask the stupid question, or you'd look over someone's shoulder and look at the journals. How can we translate that to more remote working? And is it going to be primarily remote again this year? What are your plans?
I've told my teams I fully expect everything to be remote for the time being. I think that last year was such a heady mix that both auditors and clients weren't quite ready for it. You're absolutely right when you talk about, the ability just to run down the corridor, tap on someone's shoulder and say, can you just show us this, was taken away. So it required a complete change in the way that you do things. And as we roll into this year, I think for me, it's really about the expectations. We are going to end up having to do slightly awkward conversations over Teams in order to get the kind of questions that we'd normally ask in 2 seconds flat. So it takes longer. But by having a decent conversation up front about what to expect, that's a lot. That just makes the whole process a lot easier. And we've all realised we can do it. Again, 2 years ago, it probably would have felt a bit of an anomaly of, can you really do this remotely? Whereas the reality is, yes, you can. You lose something, but you do gain other things, and that's just it's just a fact of where we're at.
It's funny, isn't it? I've got a colleague who says that they missed being able to look into the whites of somebody's eyes as they ask them a question to assess whether they're telling the truth or not, which I think is slightly not as a tongue-in-cheek approach to it, but it is the difficulty of we have to get assurance over things. It's called information produced by the entity, so reports that everybody produces. Like you mentioned, Lisa, journals listings, that we need to get assurance that listing is complete. And so what we would do in a normal year is to observe somebody do it. We'll watch the parameters they put in. And we've learned that you can do that via screen sharing and other ways of that. So the technology has helped us a lot, but it's still we still need to get that assurance. Pragmatism is one thing, but actually we still need all that assurance underneath to underpin the audit opinion at the end of the day. And I think we've probably got a good mix of that now. And I suppose looking forward, it's whether we'll go back to being fully on site during an audit, or whether we can continue to do things remotely. Well, that's something we can hopefully look forward to for 22-23 and onwards.
Yeah, lots of looking forward to. I think it would be interesting actually to explore some of the accounting implications, I think, of the COVID-19 pandemic. You know, the change to the financial regime, various changes in costs and structures and arrangements. What do you see as the main accounting implications that you'll need to focus on?
Well, quite a few. I mean, probably the easiest one to start off with is the annual leave accrual, because people weren't able to take annual leave last year. It's been a year like no other, and people are allowed to carry forward more leave. So we would expect there to be an increase in that provision in your accounts, and there to be obviously working papers to back that up. We're auditors, we're always asked after working papers and audit evidence. So I think if you don't have an increase in your annual leave accrual, you can expect your auditors to ask you why that is and whether it's actually complete if you've not thought about changing that.
The annual leave accrual is one that you're absolutely right. We're looking to see how, I would expect that to increase quite blatantly. It's the extent to which it's increased and the reliability of the data that sits behind it, because obviously it's still a bit of a shifting feast really, with the pandemic isn't over. So we're quite cautious of that, particularly around, what level of it is funded, because that just adds a level of professional scepticism, because obviously the more something's funded, the more the potential incentive is to increase the accrual. So that's something that we're quite clear about wanting to have a look at. For me, that it flows into the idea of estimates and judgments. Particularly, there's new auditing standards this year that covering estimates that require us to do a considerable amount of additional work. So I'm quite keen personally to make sure that audit committees are cited on these key estimates and judgments. So not just the annual leave accrual, but I'd also be looking at deferred income. What's the basis of deferred income this year, particularly where you've got university hospitals with large R&D contracts, for example. What judgments are being made over that? Really, really key. And then obviously the big one, the one that is both a client and auditor favourite, valuation of land and buildings. Big judgment, big estimates, big problems, big trouble. Inordinate amount of work that has to go into that from both a client and an audit side. So that's without a doubt still going to be high on the agenda.
Yeah, that's a good one, isn't it? Because like we've already talked about people being able to visit sites. I think valuers have been unable to go out and physically inspect sites as well. So you can expect your audit teams to be looking a little bit more detail about what you as finance professionals and your estates teams, the details they've passed to the valuer to enable them to still carry out a RICS compliance valuation for you to put in your accounts, and for you to know that the valuers used all the information they need to, because they won't be able to go and check things like physical obsolescence or new builds, new additions to property. So it's really the quality of what you've provided to the valuer that will underpin that. And that is a key one. That's particularly valuation is an annual hot potato, but COVID has thrown in another spanner in the works to that one this year as well.
Mm-hmm. What about the nightingales? Have they cropped up at all in terms of accounting for?
They have. Obviously, they're operating leases, and as IFRS 16 obviously still deferred, we have the ability not to have to recognise them if they're operating leases. So that has been quite straightforward in that we would not expect to see the Nightingales on people's statements of financial position because they're for peppercorn amounts generally. But it's a big thing if you're hosting a Nightingale. It's something that's actually really big that's happened during the financial year. So we would expect to see a disclosure in the accounts because of the qualitative aspects of what you've been doing, and it would probably be a note in the accounts and certainly referenced within the performance report part of your annual report, I would say. There's some helpful guidance on that. The NHSEI accounting guidance that's on their website is really quite helpful, to the points to consider on that, because the next thing that sort of flows is linked to Nightingale would be gross and net accounting for a lot of things that have come through. We're seeing it more in other parts of the public sector from COVID, where funding is being pushed through bodies to other entities. But with the NHS, and the move to the ICSs and the STPs, and we mentioned the financial framework, the second half, everybody was given an envelope within which to manage their COVID funding, and how that's passed out from your lead commissioner to the other commissioning groups and the providers will be quite a focus, I would say, of audit teams, just to make sure that everyone's recognising the correct amount of income and revenue and expenditure, because we do recognise that a lot of cash has been pushed out because it has been needed, and it's just to make sure that the accounting for that does all stack up at the end of the day.
So I guess COVID aside, what other areas can NHS bodies expect auditors to be particularly looking at this year? So what about some of those common perennials? You've already touched upon valuation of non-current assets and stuff, but what about agreement of balances or going concern, some of the things that come back every year that you'll still be looking at? Did you want to say a little bit about those?
Sure. I mean, I'll start with the agreement of balances. On the one hand, you kind of would expect it to be a little bit simpler this year with the changes in the funding regime. But on the other hand, sometimes expectations are always undermet, shall we say. So certainly we would, I'm going into this expecting there to be a considerable less level of disagreements and differences that come through the agreement of balances. It's just part of being helpful, pulling the NHS UK set of accounts together. You'd expect there to be a lot more clarity this year. So, we will be using that as part of our assurances. Not the primary piece, but it is still important to look at, from our perspective, we're looking at revenue recognition. We're also considering expenditure recognition under Practice Note 10, which also includes the reimbursement of COVID-19 expenditure. My clients, my audit committees expect us to look at that. That's part of the audit process itself, understanding the needs of readers of the accounts, that it's not unreasonable for them to expect me and my teams to have had a look at the costs that have been funded through reimbursed through COVID-19. I'm also cautious around making sure that we don't let COVID overrun the work that we do, because as you say, Lisa, we've got there's still underlying things that recur. So you've got the flowers case that hasn't gone away. We're going to still be having a look at that as as part of the year-end accounts. Going concern has changed. I'll let Cathie pick up on going concern. I'll duck on that one.
Thanks a lot, Mark. This is a hot off the press ongoing concern. Obviously, very recently there was an update to the GAM and the ARM in relation to when NHS bodies would be expected to see a going concern disclosure in their accounts, which is underpinned by the fact that there's a sort of a provision of service, continuation of service assumption within the NHS and the wider public sector, when we all know that the NHS is going to continue within 12 months. Removing the requirement or the expectation that there would be a going concern disclosure in relation to material uncertainty in the accounts is now mirrored by a special guidance note that's been issued by the National Audit Office, which is quite helpful for audit firms because it pushes us towards the Practice Note 10 approach, which Mark mentioned earlier, which reflects that whilst we still need to undertake an assessment of the going concern, which includes management's own assessment of going concern, it will be focused less on future cash flows and more on that provision of services. And this links us onto the big change in the audit this year because of the new Code of Audit Practice that's coming. and that's in relation to our work on value for money arrangements. We're no longer required to give a conclusion on the value for money arrangements in place at a body and whether those arrangements are in place. What we're now required to do is to issue recommendations where we identify a significant weakness in those arrangements. And one of them does flow back to going concern, which is where I started, is that financial sustainability is still a key focus of our value for money work. So we need to assess what each individual body has done in relation to its ongoing financial sustainability. So that will feed through, rather than a going concern, which we still will be doing, but we'll be looking at it as part of financial sustainability. So don't expect your auditors to stop asking you about your future plans and what you've got in place for getting future financial sustainability, because they still have to do that.
Yeah, and the going concerns is a challenge conceptually as well. So when I talk to foundation trust clients, when I go and talk to the Council of Governors there, they really struggle with the concept of going concern and material uncertainty that we've had across the patch. And it's, for them, it presents a real worry. So on the one hand, there's some benefits in making it a little bit more clearer about the continuity of services prevailing over the NHS. But on the other hand, I think there still is this, the audit need around financial sustainability, but also from a board's perspective, a going concern paper, a really good going concern paper really collates all of the issues. And, quite a few of the non-execs that I work with actually value that paper as part of the annual process, not so for around, supporting a going concern assertion, but actually supporting their understanding, the comprehensive understanding of the financial position now and the future. So I suppose what I wouldn't want to see is any of that good practice kind of missed out simply to comply with the new guidance that's come through.
Yeah, I think you're right. I mean, you touched upon the new code of audit practice, and obviously this is the first year that it's going to apply to NHS bodies. And there's the change in the VFM assessment. Can you tell us a little bit more about the audit changes or the experience NHS bodies might feel when you're auditing to comply with the code this year?
Yeah, I think it's fair to say we're expecting there to be more work involved in our VFM work for this year under the new code, and that's underpinned by the fact that as well as identifying whether significant weaknesses are in places and then issuing recommendations in relation to those weaknesses, what the key output of our work will be is a commentary on the arrangements in place at each body, and that will be in our auditors' annual report, which is a public-facing document. And that requires us to get quite a lot of detail about what each individual body's arrangements are and what we think of those arrangements. So that is a very different approach from previously, where we identified was there a significant risk, and if there wasn't, we didn't do any further work. So I would imagine that to be more work from your auditors, because they'll need to understand that. So I would imagine that would be more time with officers just to get that. But Mark has a much better idea of the on-the-ground impact of that work.
No, you're right. You're right there, Cathie. Without doubt, there's a considerable amount of additional work that's going on as a result. One of the things for me that I found particularly helpful is we've really engaged as early as possible with audit committees, not just traditionally through your management teams, but actually through with audit committees to help them understand the difference and also, clarifying their responsibilities around arrangements. The complete suite of arrangements that sit in place, some of which are described in annual governance statements, some aren't, some are in different sets of reports. So I've had some really engaging and really, focused conversations with chairs of audit committee about how do they make sure they are satisfied that arrangements are in place, and where they're not, or where they're not cited, what do they need to do about that? Because ultimately it's not our responsibility to put these in place. It's for NHS providers, and by bringing the audit committee and management on board, we've had much better engagement over how do we ultimately get to that commentary position, because this will go in the public domain and we will be unfettered, independent and objective about it. But by having proper engagement up front and in-depth, frank, open, honest conversations, you can get to a place where everyone is cited on the outcomes whether they like them or not is a different matter, but they are the right position to get to. And if you can take people on that journey with you as an auditor, I feel you have a stronger relationship as a result of it. I think that's part and parcel of doing the right thing.
Yeah, I think the NAO do intend it to be, like the annual report, to be a real valuable commentary, don't they? And I think that public-facing discussion that looks backwards and forwards, rather than a yes or no, you've passed or failed kind of a result, should be really valuable both internally to the NHS bodies, but to the public and to the wider NHS systems as they kind of develop an understanding of that place going forward.
Definitely agree with that, Lisa, because it is that the commentary that allows us to put a bit more context for each individual body in there as well. And again, for COVID, coming back to that, it's going to be quite helpful because we recognise that many bodies won't have gone through their financial management processes and forward plans in a way they would in a normal year, because there's been changes in the funding regime. We don't know what's happening with the planning rounds being suspended. So we wouldn't say, well, you haven't done that, so it's a fail. What we're expecting to say is, due to COVID, you have responded by doing X, Y, and Z and still continuing to manage on a daily basis, as well as within your system and with working with partners and all that. And that was something that wasn't available to us previously, which we can now put in the context, and you take that forward look, which we can add in as well to give people a better idea of where a body may be heading.
Yeah, and I think it goes some way to helping with the audit expectations gap, really, because and if I stick with Foundation Trust for a moment, only because it helps serve a purpose here, when I'm having conversations, presenting, the results of an audit to a council of governors, their initial understanding of what value for money is and value for money conclusion is quite different to what we actually do. So moving into a more commentary basis, I think it helps with the transparency and clarity about the work that we do. And you can take that from a foundation trust, and then, as Cathie said, you can bridge that more further into the wider public, which I think is, for me, is a positive step forwards. It's really important that the role that we do as auditors, I see it as it's fundamentally important to the public purse and taxpayers' confidence and patients' confidence in well-run organisations. So anything that we can do to help bridge that gap is a good thing.
Yeah, definitely. Are there any other areas that you think it would be helpful to remind finance teams that you will definitely be looking at this year? Obviously it's different for everyone, but there are those things that apply to many NHS bodies that we haven't touched upon yet.
Yeah. I think one, we've been a bit focused on providers so far, but one for commissioners is the prescribing accrual. Obviously we'll be looking at that, and as a consequence of the longer timetable we've got, you can expect your audit teams to be looking at actual figures that have come out since you prepared your accrual that's gone on the accounts. So I know that was a bit of a bone of contention last year at some clinical commissioning groups, because they thought we were waiting to catch them out by refusing to sign off till we got more information. But that's just, as auditors, we have to take the most up-to-date information available at the date we sign the opinion. It's not catching anybody out, it's just updating those estimates that are in there if you've got the actual information, then that's more correct. That's one for commissioners to take to focus on and not to feel picked on by auditors. It's just the usual things every year. We've covered PPE evaluation, that will come up, that will always be there because it is big figures and it's an estimate. With the move to the block contracting, we're expecting partially completed spells to be removed for all the providers from the income, and then the clinical commissioners side on their expenditure. And again, I'd look at the accounting guidance that's come out from NHSEI. It's really, really helpful. I don't want to blow anybody's trumpet, but it really does tease out those points that, as Mark said earlier on as well, it's still business as usual plus COVID. So we can't ignore all those usual audit focus. So we will be sample testing your income, your expenditure, everything that comes through, your annual leave accrual, looking at your annual report disclosures, making sure they're consistent, the perennial joy of remuneration disclosures and getting those correct. And they're always tricky, those, and we will be looking at those. So it's making sure they're all through.
Mark, you'd have had lots of discussions, wouldn't you, recently with Director of Finances. Is there anything on their kind of worry list as they walk into the office that they flag with you that we haven't covered?
I think we've covered the majority of them. Again, a key aspect for me this year is actually the project management and the reporting timetable, because getting all of your ducks in a row with audit committees, the auditors getting the reports out, and making sure there's enough time to have a proper and robust conversation about things. I'm expecting there to be a good, thorough review of the annual report, the front end narrative, because clearly there's going to be a story and a half to tell this year. So having that really well organised and slick to get to whatever the agreed deadline is really, really key. More so, whilst we've got this extended deadline, I actually think it's more important this year than in previous years where it's been tighter, just because of the additional volume that needs to come through. So that project management of the reporting cycle is absolutely key for me. Never forget that we've got a duty around management override of controls as a fundamental part of our audit. So as much as me and my team, we love working with public sector organisations, but we'll still need to be fully robust and independent, and we'll ask pushy questions and we'll ask pointed questions at some times, but they're all done with the right intention, which is about giving a safe and secure audit opinion.
It's one of those things, isn't it, Mark, that the auditing standards require us to, if somebody operates within a financial system that incentivises hitting a particular financial target, then we have to increase our auditor scepticism. And obviously with control totals and all the various top-ups that are in there this year, that's something we really have to get our heads around and challenge. That perhaps if you're choosing not to recognise expenditure, or you're recognising more expenditure than you would normally do, we need to understand that's why. It always flips back to changes in accounting policies. Why has a body changed that accounting policy? Is it because it provides better information, or is it because it achieves a particular financial position at the year end? Which we don't think everybody's doing it, but we just have to be aware and conscious of the incentive that's there and reflect that in our audit work. Always makes it sound very suspicious, but it's sceptical is the word, not suspicious, and it's our job to challenge. That's what we're here for.
I think that's really helpful. I think you've touched upon this already, but what else would you be expecting or asking NHS finance teams to be doing now to best prepare for the imminent audits, that sort of get ready, go period?
Oh, it's working papers. I have a theory that hopefully one day will come to fruition, that if you prepare a fantastic set of working papers, you won't need to see your audit teams ever, COVID, remote working or not, because they'll go away, they'll look at your working papers and be able to work everything out from there, other than, we always get sample testing. But that is my hope one day, that we'll have an audit where we don't have any questions because the working papers support everything so well. That's being a bit flippant there. That is the point. It's making sure you can remember why you've put something in your accounts. You can back that up, that it's gone through quality checks as well internally. So then you can turn around and say to the finance director, the accountable officer, and those charged with governance, that actually those accounts stack up and they're evidenced by everything that supports that. And because that's the same things that your audit team need to look at.
Yeah, no, working papers are key, and Cathie's right there. They've got to be right. We all know that there's considerable pressure on everybody to hit deadlines. But I can promise you one thing, that without a decent set of working papers, and from our perspective, we won't rush through work to hit a deadline if it means the audit quality is not going to be there. So it's not just the working papers, it's the ongoing dialogue. We aren't here to catch people out. That's not our purpose. Is not to make anybody's life difficult. We actually have mutually agreeable objectives with this, and we just want to get to the right place. And you can only fundamentally, it all comes down to having decent, open conversations about things. Something pops up, as it always does, just talk about it. And that comes, that's the direction we put on our teams. We do not audit by email. There's nothing more frustrating and lacking context than a piece of text on an email that's fired out at a random time of the day. So, dialogue on top of working papers from a finance team are always appreciated.
I would say, and Mark's not going to thank me for this one, but I would always say to nag your audit teams. If you're not sure where things are at, don't sit back and wait for for queries to come in, just be a little bit proactive as well, because they're busy as well. We're all busy, and it's just if they've not got back to you, or you're wondering what's happening with the audit, you ask that. Like Mike says, it's a two-way process. We'll ask you questions. You should be asking us those questions as well, just to get that project management sort of really tight.
I think you're right. I think that, you know, as you said, and everyone always says, the biggest difference to making the audit go as smoothly as possible is that communication. And I do wonder if we should look back at the previous year, because I know once you've finished preparing the accounts or auditing the accounts, often there's a big sigh of relief and you kind of lock away all that process and move on to the next thing, don't you? And I wonder if there's an element of taking time to just think back, you know, if last year, what were the big things that we were worried about here, or that we need to learn from, and I wonder if there's an element of that too.
You're absolutely right. I would have liked to think that's all happened already, to be perfectly honest. There's not much of a window between accounts actually landing. If you haven't had those conversations and you don't feel comfortable, or you've got an element of doubt, then raise the question, because from my perspective, if somebody just wants clarification, I'd happily give it. I'd rather have that brought to my attention than let anything kind of drift by and then, you know, pop up as a surprise later on. There's nothing worse than that. We just don't need that. You know, these are stressful times as they are. We don't need any more.
No, I mean, and you've mentioned throughout the conversation as well, you know, that we've talked about the NHS finance teams, the preparation that they need to do and what to expect. You've talked about the importance of engaging the audit committee and non-executive directors. Is there anyone else that, you know, we feel is a really important part of making the audit go smoothly that should be involved?
Do you know what? The one thing that always comes to mind for me is valuers and estates teams. The amount of work we do on valuation of land and buildings goes up every year. All right, it only goes one way. And we are reliant and we are drilling into that kind of, you know, core data more and more and more. And particularly, you know, I've got some clients that still have manual records. You know, trying to do that over Teams is not much fun and it takes time. And sometimes they don't quite understand why on earth are you looking at this. I can tell you now that is something that, you know, certainly all of our teams are going to be doing, drilling into, you know, discussions with the valuer. So having them fully engaged is absolutely essential. Thankfully this year we're not doing any work on the quality report, and that's thankfully from my perspective, because A, it takes away a piece of work, and secondly, you know, as I say, with the value for money conclusion, I think there's a level of expectation gap between what we do on the quality report versus the assurance reports that we do provide.
You've mentioning reports there, Mark. You've looked at it's the annual report side as well, because obviously we look at the accounts and they're bolted onto the back normally of the annual report, everything in there. So it's making sure that everything that goes in the annual report reflects the story that's in the statements as well, because quite often it's different teams preparing the annual report, making sure that's they tell a cohesive story throughout what's in the narrative, any figures in the front end of the accounts, and then that they're reflecting in the financial statements. So it's just make sure those people are teed up as well for any audit queries.
Really, really helpful. Are there any final reflections that either of you want to bring to preparation for this year end?
Without a doubt, the most important thing for me about this is to take the positivity, is that we've all been through some tumultuous times, but we've all got through it, and we've shown that there's a lot more possible than perhaps we ever thought of. You know, we're dealing with a year of really, really tricky financial governance, financial controls, you know, some uncertainties around financial planning, not to say the least around the operational impact of everything that we've been through. Financial statements continue to be complex parts of the financial governance of an organisation. But without a doubt, every client I've spoken to have got a team that's absolutely committed to this and can do it. It hasn't been unsurmountable. So I think there's a huge amount of positivity to take, that we can move forwards, and, you know, next year will be next year, but let's just deal with what we've got now, and we can do it.
I'd echo that, Mark. I think it's that we're all working to the same end. It's not an adversarial process, and I think we've all, for that, between audit teams and finance teams, and then between all the different audit firms working together with the National Audit Office. This year has been a lot of change. Things have come up that we've had to account for that are entirely new, and we've all worked together sort of really well to get that and get things bottomed. So I think that's a real positive from going through, but we might see a little bit more change as we go along, because things are coming out that we're still working out, but we'll deal with it and we'll all get there.
Excellent. Well, I found that really interesting and helpful to hear some of the insights that you've had just before the audits kick off properly. So a huge thank you from HFMA and a huge thank you from our listeners for joining us today. And also a big thank you to those listening to our podcast. If you want to take a look at our website, there's a further material that might help you through the year end, such as the year-end checklist for members, the year-end reminder briefing for non-executive directors, and our briefing on external audit best practice in working well together. And don't forget to subscribe to this podcast to keep up to date with new episodes.